at REITWeek 2013 in Chicago, and joining me today is Zeno Adams, professor with the Swiss Institute of Banking and Finance at the University of St. Gallen. Thanks for joining us. Your recent research, Sources of Risk Spillovers Among U.S. REITs, examined REITs with similar assets within the same region. Tell me about your findings and the need for geographic diversification among REITs.
So let's say you are an investor in REITs, and because you care about geographical diversification, you made sure that all properties in the REITs are spread out all over the map. Now, there may be a situation in which each REIT individually appears to be geographically diversified, but the portfolio is not. This may be because some of the REITs have similar locations, so they are subject to similar economic shocks. In this case, the portfolio is subject to risk spillovers, and this is what we investigate in our paper. So now the tricky thing with risk spillovers is that you may not observe them most of the time. If we are in a tranquil market period, there are no shocks. So if there are no shocks, there are no spillovers. So for some time, your portfolio may behave as expected. And low correlation provides some false sense of safety. But once the crisis hits, then we have spillovers. Then the risk in one REIT is transmitted to others in the portfolio. In the extreme case, you have the shock in one REIT and infecting the entire portfolio. So this is our topic that we investigate, and we identify a number of variables that can be used to make a portfolio more crisis robust or spillover robust.
Are there any new trends within the real estate industry that have been particularly surprising to you?
Well, I had expected that, for instance, the burst of the housing bubble in the US and elsewhere would have been such a shocking experience to investors that they would be very alert and very reluctant to invest into markets with unusual high house price growth rates. Now, what we see right now in some larger cities in Germany and in Switzerland is exactly this. We see unusual high house price growth rates and investors getting attracted to those. So I was a little bit surprised by how quickly the risk appetite has returned.
Now, real estate finance and economics is your main field of research. What is the single most important advice you give to your students looking to go into the field?
Well, most students think that real estate is some kind of specialization within finance. And quite a few think that's one of the more easier ways to go. And I'm trying to tell them that this is not the case, that you actually, in order to understand real estate markets, you actually need a very broad economics education. You need some knowledge about the macroeconomy because of the important ways property markets interact with the macroeconomy. You need some knowledge in finance because you have securitization, you have real estate derivatives, you have prepayment risk, default risk, credit risk, all that. And finally, if you want to do research and if you want to work empirically, you also need some good understanding about econometrics because many models in real estate are spatial models. So, and for that, you need a good fundament of econometric knowledge. So if you only focus on real estate, you may miss some bigger picture view of the topic.
Thanks so much for joining us, Zena.
Thank you.
I'm Carissa Chappelle for REIT.com.